Okay, good morning, everybody. Good morning, everybody. Thank you all for joining part two of our webinar series on mastering Green Steel Taxonomy and CCTS. This is a series which is brought together as a partnership between Big Mint and Centra.world. Right now, it's a Monday morning. We truly appreciate you starting your week with us. We have an exciting session lined up today that promises not only to inform, but also to inspire action towards a sustainable future for the steel industry. My name is Harsh Chaudhary. I'm the CEO of Centra World, where we help steel companies measure, report, and reduce CO2 emissions. We work with leading steel companies in India and abroad. We lead the space on the topic of carbon footprint, certification, CBAM reporting, net zero roadmaps. And now we're building up a comprehensive solution, software technology based, for the adoption of CCTS and Green Steel Taxonomy. Building upon the insightful discussions from part one, today's session dives deeper into the practical challenges, strategies, and policy frameworks shaping the path towards a greener, more sustainable steel industry. Now, the steel industry is at a pivotal point, tackling critical questions around decarbonization, green technologies, carbon capture, and the evolving regulatory landscape. As these issues take center stage, today's session will focus on understanding the taxonomy of green steel, measurement and reporting requirements, calculation methodology, and tools, followed by a live questionnaire. Now, before I do a full recap of what we discussed in the last session, I would like the opportunity to introduce the panelists over here. First, I would like to introduce Mr. Saurav Didi. Mr. Saurav Didi presently serves as the Director of the Bureau of Energy Efficiency, BEE, within the Ministry of Power, New Delhi. Prior to this role, he worked as a senior consultant at PricewaterhouseCoopers, PwC. Throughout his career, he has displayed unwavering dedication to advancing energy efficiency and sustainability on both national and global scales. His most notable achievement is his pivotal role in the Standards and Labeling Program, which led to a substantial reduction of approximately 57 million tons of CO2 emissions. That is not a small number by any standard. It's a very big number, and very well done on that. He has been at the forefront of groundbreaking initiatives such as the development of India's carbon markets and the formulation of the National Mission for Enhanced Energy Efficiency, the document, which has played a significant role in shaping the country's energy policies. Currently, he is actively involved in developing the Indian carbon market and overseeing various other programs, including those related to energy efficiency in the building and transport sectors. His enduring contributions have made an indelible mark on India's efforts to reduce carbon emissions and enhance energy efficiency, championing a more sustainable and eco-friendly future. Mr. Didi, we are honored and in awe of your presence with us. You have had a pivotal role in developing CCTS, Green Steel Taxonomy, going into that area and really shaping and shaping how green steel is going to evolve. Both these policies are, I mean, they're definitely more than welcome, but they're so forward-looking. It's a pleasure to have you on the webinar, sir. Next, I would like to introduce Mr. Nirmalaya Dev. Mr. Nirmalaya Dev is currently heading the editorial operations of Big Mint. He has over 16 years of experience in research and media and communications. Nirmalaya is keenly interested in steel market dynamics and the green transition of the industry globally. Prior to his stint in steel market research and analytics, Nirmalaya was associated with mainstream journalism for over 10 years. An MA in English from Calcutta University, he holds a PG degree in communications. Nirmala is also a good friend. We meet often and we discuss several topics around the topic of the steel industry and green steel. Nirmala, it's great to have you on the panel. Welcome to the webinar.
Thanks a lot.
And last but not the least, I would like to introduce Vikas Upadhyay. He is co-founder and COO at Centra World, leading technology and client operations. Vikas is the leading expert on decarbonization and energy transition for the steel industry. Prior to joining Centra World, Vikas was junior partner at McKinsey with 17 plus years in digital and industrial manufacturing. At McKinsey, he led McKinsey's industrial, digital, and technology practice for the EMEA region and worked with 100 plus steel and manufacturing companies globally across multiple disciplines, including sustainability, technology, operations, and strategy. Vikas is extremely deep into the topic of CO2 emissions, measuring, reporting, certifications. Again, Vikas, welcome to the webinar. Good. Now, before we move on to the question and answer format, I'm just going to share a couple of slides with the group over here, just to set the base for what we are about to discuss. So, we've heard about CCTS. We've also read the documents which have become available to us at the through the BE. But just to put this out into what this means, actually, let me start off with the next one, right? Now, this is something that we had shown in the last webinar also, but this is just a refresher. Now, the first layer of that you see, the CCTS methodology, that is a methodology layer. Now, both systems, the star rating system, Green Steel Taxonomy, as it's also called, as well as CCTS, both rely on the CCTS methodology. So it's one common methodology. There are at least 5 to 7 different methods of calculating CO2 footprint in steel manufacturing. CCTS thankfully has integrated many of them and created a common standard, which I hope becomes the common standard which is adopted across. That is the CCTS methodology. Between the star rating and the CCTS actual reporting, there is a minor difference, which we'll talk about in a bit. The next level is actually the reporting layer. Now, we have the star rating system, which is as per the Green Steel Taxonomy, where companies will get rated as 5-star, 4-star, and 3-star, depending on the threshold levels of 2.2 tons of CO2 per ton of steel, 2 and 1.6. And on the other side, you have CCTS reporting, which covers approximately 130 to 140 steel installations in India. CCTS goes broader than steel. It covers many industries. Steel is one of them. And this CCTS has taken over from the PAT scheme. And it's just not a matter of reporting. All these reportings have a path to monetization. So I keep telling people that sustainability is not just about reporting. It is about creating value for yourself and for your customers. And sustainability has to be very closely linked to profitability to make this really successful. That's why you have the monetization layer. Once you have the Green Steel Taxonomy and you get rated, you can participate in green public procurement. The government has pledged that about 37% of steel purchased by the government will have some element of green in it. At the same time, there are private sector also, which is adopting it, particularly if I talk about the long product sector. In the long product sector, all of these are actually getting into looking at green steel as an opportunity. And on the CCTS part, there's carbon credits and many more things to do. And quickly, just talking about the timeline a little bit, right? So, the CCTS, it has been in discussion and in review, as it likely would have taken time to come up with such a great system. This gets launched in April 2025, where companies need to start testing and digitally tracking their greenhouse gas emissions, either on a daily, weekly, or at a minimum a monthly basis. In June 2025, by June 2025 rather, they need to submit their monitoring and verification plan. This plan covers all the things which steel companies will adopt to be able to measure their emissions, to get it verified and things like that. So it's not the actual reporting of numbers, but the reporting of the plan. And then between April 2025 and April 2026, companies need to submit their decarbonization roadmap, which includes two parts. One is a 5-year action plan, which covers all the major initiatives that they will conduct to meet the targets, and also an annual activity plan, which is a little more in detail. And by July 2026 is when the entire report for the FY 2026 has to get submitted. It covers all the above reports mentioned, and there are specific forms that the BE has sent, Form A, B, C, D, and E2, which need to be submitted. And all of these need to be verified by an ACVA, which is an accredited carbon verification agent. Okay. That should give you an overview of what we're talking about. With that, I'm going to open up to the questions, and what I will do is I will ask a few questions to starting with Mr. Didi. He's also pressed a little bit for time, but I will start with Mr. Didi, and I will also take a few questions from the audience. Mr. Didi, thank you again for doing this with us. Now, we have all spent a lot of time looking at the calculation files which have come around, the methodology which has come around. There is this eternal question of scope three, which always comes up in every discussion. I would love to hear from you, sir, around how does the CCTS methodology actually address the scope three? Sir, you'll have to unmute.
Sorry. Look, as of now, we are not looking for scope 3 to be included. But we cannot even give away with that. The reason is that uh, what kind of scope 3 we have to consider. For example, if something is imported in between, for example, when you are making a wire and you are importing ingot, then scope 3 will be covered for the ingot. But from the transportation side, as of now, we are not covering that how it will be transported and how it will be brought to that factory. All those part of the scope 3 is not included. So in the CCTS per se, scope 3 is only partially covered from where your situation is changing from year on year basis. That if your import or export of intermediary product is changing, from that perspective, we are including. And from that perspective, we have added in our questionnaire. But if we look at the green taxonomy per se, we have to include a lot of things, much more. So I will say this questionnaire or the data set which we have prepared will actually evolve further in case of green taxonomy, where we have to include further more information which will be helpful in actual calculation of green steel finished product.
Very good, sir. So that is actually very insightful. And I think this will be news also to many people who have joined the webinar, that in CCTS, the usage of scope 3 is limited, but in green steel taxonomy, it will be more encompassing. And
Right.
that methodology is in evolution right now.
Right.
Very good, sir. Very good, sir. Sir, the second question is around target setting. Now, in CCTS, as we understand, each industry or each company or each installation rather will get a certain target. Would love to understand, sir, how this target would actually be set.
Okay. So this time we have had a deviation from the perform achievement trade. That in perform achievement trade, we had I'll say, uniform target across the sectors, like 4 to 6% target we used to set for 3 years. But this time we had a more professional or scientific based approach, where we calculated how much is the potential available, first of all, in each respective sector and the subsector. For example, when we are talking about cement sector, integrated cement and grinding sector will have a different kind of potential. Similarly, in steel also, we may have different kind of potential with reference to the whether it is an integrated ISP or a small scale or a steel processing unit. So that's how we calculated. We identified technologies. What are the technologies available for implementation in next 6 years by 2030? And based on those technologies, we calculated how much is actually implemented and how much is going to be implemented by 2030. And we calculated those numbers. Along with that, we calculated how much is the investment required for those. And then we calculated marginal abatement cost, that how much rupee I am going to invest to save 1 ton of CO2. And there are technologies which you can say energy conservation or energy efficient technologies, where we are going to have reduced our energy consumption, and eventually we are going to save money rather than we are going to invest by 2030. And there are technologies, for example, CCUS, where you are going to pay, but returns may be negligible or zero. So in the combination, we calculated that what will be my marginal abatement cost till 2030 for implementation, and it should not have much impact on the price of my steel. So I will say negligible impact on the price. Negligible means it should be less than 1% impact on the price of the steel. And based on that, we calculated where we can land up by 2030. So I guess this value is coming around 19% or percentage, somewhere around 15 to 20% for various sector it is coming. And then 40% of that we are giving targets till 2027. So say if 20% is the potential, then 40% of 20%, which is roughly 8%, will be the target till 2027. That's how we calculated, and it we can say that it is in case of steel, I guess is hardly 3 paisa per kg of steel is the impact on the production. Actually, 3 paisa is lesser, so even not increasing.
Wow. So this is extremely insightful. I really like the part that you've considered technology as well as commercial, and obviously you've used the marginal abatement cost curve to be able to evaluate all the available technologies, and that will give members of the steel industry a lot of sort of confidence in the way that these targets are set, rather than just a top-down target, which we see in many places. And I think noteworthy, the steel industry can see a target in the near future of about 15 to 20%, and 40% of which by 2027. All right. And so I think, I think steel companies can breathe a sigh of relief. You mentioned a very important number around less than 1% impact of cost, and the number for steel as 3 paisa per kg. I think that will be a sigh of relief, because I think everybody, with the down cycle of steel ongoing, everybody is concerned about this, right? While so we were talking about while we were talking about targets and investments, so if companies are looking to fund some of these initiatives, uh, what are some of the channels which they can actually explore? And does the BE have some affiliations or programs which could be leveraged as well?
Look, I will not say directly, but indirectly, if you look at green steel, that green taxonomy, and when you said some X percentage, 30 or 40 percentage of the steel will be procured by the government for, from the green steel itself. And that gives you a motivational factor that how you have to produce more green steel. And such things are better than giving any kind of incentive, because I will say this is a market base that you produce more or you produce efficient and sell your product. That's a market dynamic or market based approach rather than incentive. However, CCTS is kind of an incentive mechanism where if you will do more, much more than, say, if your target is 6% and you have reduced your emission by 8%, so additional 2% credits you can sell in the market. So for that, you can monetize by using carbon credits. And we are expecting that this price for carbon credit should be somewhere around in the vicinity of $8 to $10 at least. So then you can monetize that and you can get incentive from that. So both the schemes will work in tandem with each other. And one market based approach, and second is the incentive based approach.
Very good, sir. So you touched on a very important point about the price of carbon credits. That has been, many people have been asking us if we have a crystal ball which will predict something like this. It seems to be the big question. But we will come back to the carbon credits point in a bit, sir. Now, as part of the CCTS, there are 130 plus companies of steel who will be participating in this. Uh, Earlier, we had e-certs, which will now come out as carbon credits. Carbon credits have a global outlook as well. Wanted to ask that the carbon credits which are being generated now, can steel companies who are not in the PAT cycle or not in the CCTS cycle, can they also participate and generate carbon credits?
Okay. So one major difference from PAT and the carbon market is that we have another wing or another arm which is called as offset mechanism.
Okay.
So PAT is transformed to compliance mechanism where we are giving targets around 270 or 275 industries are there who are going to be to participate in this scheme. But the other industry who are not part of this scheme can participate through the voluntary mechanism, which we are calling as offset mechanism. Their industrial energy efficiency projects can be registered similar to, if you remember, CDM era.
Yeah.
Similar to CDM era, they can register their projects and they can also generate some carbon credits. However, there is a flip side in that those projects should not be on their own business as usual projects. Those should be, it should show additionality clause that either they are going to give some kind of a significant benefit to the society, or financial additionality they can show that they are not on its own, they are not viable. So those kind of projects still can participate from the steel industry as well.
Got it, sir. So, and will this be limited to energy efficiency projects only, or can it take up like fuel substitution and things as well?
it, they can even have forestry projects,
Okay.
they can have fuel substitution, they can have energy efficiency. So methodologies are being developed.
Okay.
This will be launched most likely in coming couple of months,
Okay.
that offset mechanism, and there you can see methodologies available. Right now, we have already uploaded 12 methodologies on B website.
Okay.
Uh, and one of them is, I think, energy efficiency and fuel switch as well. And it is open for public comment till, if I'm not wrong, 30th or 31st of 30th of January this month. 30th of this month, you can give your comments, and once it is finalized, those methodologies will be applicable. Similarly, but they are not the final list, so we will add on those methodologies every month, and we are expecting that by 2025 or 2026, we will have more than 100 methodologies available. So
Fantastic.
depending on your projects, you can select your methodology.
So this is a breath of fresh air because so far we had been reliant on methodologies coming from Vera or Gold Standard, etc. Which whatever my experience has been in this generating carbon credits, uh, it took some effort to translate all of that because they were not related to India. And these are you're setting in place all the foundation stones for really a thriving carbon market to be able to monetize all the efforts which are going in. So thank you again for for setting in place and thinking so well about something like this, sir. So now with these carbon credits, with carbon credits as well as reporting coming in, the validation process, the verification process is super critical because at this point in time globally there is an issue of trust deficit which has come in carbon credits. We recently heard of carbon credits in China generated from rice farming, which Shell had to write off because the data did not exist. So, what are some of the cornerstones of the validation process that steel companies can expect that they will actually go through?
Look, uh, this is the most critical question. That trust on any scheme depends on two players rather than us, I will say. It depends on the developer or the industry, how they are reporting. Second is on the verifiers, that how they are verifying. They are, hopefully they are not going in under the tree and filling all those questionnaires and numbers. So that should not happen. So there will be checks and balances, which are, I'm saying, physical checks and balances, which I'm not going to speak as of now. But in future, we would like to have some kind of AI enabled checks and balances. And where I will say you guys, like IT guys, can also support us much more in that. That how we can have correlations developed with the help of AI, and we can pinpoint that what are the issues in every project, so that those can be highlighted in the at right at the beginning, and this will enable more trustworthy system. So that's what as a future we are looking at. Yes, apart from what others are doing, we will do that. That all the checks and balances in the physical format, that every GPS enabled photographs and all those things should be there. But still, we want to go one step ahead with the AI enabled verification process, which we will do apart from auditors and the project owners or the developers who are submitting their data, so that
Right.
it will be, I'll not say foolproof 100%, but close to 100%.
Absolutely. So that is very, very, very forward-looking, right? We are not just talking about, we're talking about a short-term plan where through robust processes, we're going to validate this data. There will be digital, semi-digital ways of doing this, but in the future, and this is not the far future, but the near future, we are talking about the active use of AI.
Not more than 2 years.
Not more than 2 years. Okay, so two years will fly by very quickly. I could make that bold statement that in let's say 2 or maybe 3 years, the entire CCTS will start to rely more actively on advanced technologies like AI. That is absolutely, sir. That's the absolute right way to go. Um, so just maybe just a couple of questions more. When we start thinking about the use of technology for measurement, one of the things which I had heard this at a conference in Europe, that steel consumers, for green steel to happen, steel consumers should get used to paying a little bit extra for green steel, and steel producers should get used to actively sharing their data for green steel so that they build trust and transparency. Uh, as part of CCTS, they will be submitting their detailed data and detailed information. I think one of the questions which we heard from some of our clients was that how safe is our data? How is it going to be measured and monitored? I know the answer to that, which is it's going to be perfectly safe with a BE, but would love to hear your points around how will this data be used beyond just setting targets. Is there going to be some benchmarks or something which will also get created?
uh, if we talk about analysis part, that will be very safe, that because without name we are going to analysis, benchmarking and all those things we will do. uh, that will be without any name, so nobody has to should bother about that. uh, Main consideration is when we are sharing that data from company names perspective. That is a detailed data which we had, which we are not going to do in any case. Even I think only our sector expert from the steel sector can view that data, but still he can't share that kind of technology we are creating. Data will be shared by mostly by the industry themselves. Only thing is that we will make enable them, that industry, that what kind of report they want. For example, if you want to sell your green steel data, if you are selling your product to somebody else, you can call out that data from the portal itself in a specified format or structure. That kind of thing we would like to do. And but that will be taken out by the industry owner, industry or the authorized person only, not by us or not by everyone. So that kind of thing we are developing. But otherwise, if it will be shared, it will be shared by them, not by us. Under even RTI, nobody can ask.
Oh, that's very good. Good, sir. I
Because
think that will lend a lot of confidence to people.
because this is a confidential data of the industry,
Absolutely,
which
sir.
has some kind of a uh, profitability issues that if we will share. So that's why we are saying it even under RTA, and people asked us, even in the PAT scheme, people asked us such data and we never shared. We
Got
said
it.
that this is a confidential data.
Got it, sir. Got it. Um, Sir, one question was that supposing I have a steel plant, and my CO2 emissions are, let's say, on an average, they're about 2.5 tons of CO2 per ton of steel. Now, I undertake a project like I have now installed waste heat recovery, right? And this number has come down to let's say 2.2. Right? From 2.5, it has come down to 2.2. Uh, this I will account for in my overall carbon footprint. And it's come down from 2.5 to 2.2. And let's say that the target was itself was 2.5. So I've created a delta of zero point 0.3. And that zero point 0.3, on the basis of that itself, the carbon credits are issued to me. I don't have to create a separate project for this waste heat recovery boiler for the generation of carbon credits.
Until unless you are covered under the CCTS compliance mechanism, you don't have to do anything. Only thing is that whatever value you are now, target minus that value multiplied by the production of that year,
Yes.
your credits you will generate in that respective year.
Perfect, sir. I think that makes life a lot simpler because a lot of people have this confusion of double counting that I'm doing a project, it will be included in my carbon footprint, I can generate a carbon credit. So I think that really solves.
Only concern is that you are not claiming those certificates or any such project under Vera or gold standard as well. So that undertaking you have to give
Okay.
any industry, because otherwise it will be double counting. That
Absolutely.
say you got credits here, also you registered a project of say waste heat recovery project under Vera, which is which we are not controlling.
Absolutely, sir. Yeah.
So,
Otherwise, there's no way to monitor that. And
yeah,
for companies who might already let's say that they have again come back to the waste heat recovery boiler. Let's say that they have generated a few credits and they have forward contracts. Let's say for another 3 or 4 years. Should they look actively at removing some of those forward contracts?
I will suggest if somebody is having such thing, they can be in touch with us, because we have to see nuances of that particular project, that how actually everything look like. As of now, I cannot give answer on exactly on that,
Sure.
that how things can happen if they have a forward contract. Uh, we'll see, and we can discuss in depth with that particular project, and love to see that, because this is a unique thing which you have said.
Yes, sir. We have a few, and I will share some examples. This came up in a few discussions. So, I have one last question for you, and this question is coming in from the audience. Uh, uh, many steel companies they have waste materials such as slag, which comes out. Now, in the event that they are using this slag for internal operations like building a road or something like that, so uh, in that case, I know it's a very specific example, but this question has come from the audience. That in case they're using this waste material would have been sold to, let's say, a power company or something like that in an earlier case. In this case, instead of using other material that they have bought from outside, which will have its scope 3, instead they are using their own waste, which is slag. How would something like this be accounted for? It would still get counted as a reduction in their carbon footprint?
Look, uh, usually this slag is used by the cement plant.
Yes,
They are claiming that.
got
So
it.
it depends on where it is being used and how it is being claimed. Again, if cement is claiming that, then probably you will not get that advantage. If you will use that for your internal purposes, it is not going out of your plant boundary, then we have to see how we can include. So cement may, it is very clear that they are using that, and the percentage slag is actually reducing total emissions per ton of cement. But in case of steel, we need to check how it is being used. If it is used for the cement steel production, uh, then probably yes, you can get benefit, but we have to look into the actual data.
Fantastic, sir. Fantastic. Yeah, that is a little bit of a unique case, but I'm seeing a lot of companies actually experimenting with using this slag. I think JSPL has recently done something, SAIL is exploring and many things. Sir, again, I know that you're pressed for time. We will let you go at this point, sir. But it was such a great half an hour, 40 minutes to actually talk to you, sir. we've learned a whole lot, right? I mean, we've learned around how the Green Steel Taxonomy calculation is going to evolve to include more Scope 3. We've understood the details of how the target setting process will work. We also get confidence that we are not expecting like a huge impact on how much it will cost to move over to this green steel. We also learned the 8 to 10 dollars per carbon credit price range. It's also good to hear about the offset market, that there is a fledgling offset market. This is going to be a game changer, sir. This is really going to remove so much of complexity because of Vera Gold Standard international programs. These will all be available over the next few months, and obviously super inspirational to hear about how verification will evolve into AI-based verification. Again, sir, thank you so much for your time. It was a pleasure talking to you, and I'm on behalf of all of our 50 to 100 participants. All right, thank you again for your time, sir.
Thank you. Thank you.
Thank you. Okay, with that, we just heard from Mr. Didi, who is one of the prime authors behind the CCTS and the Green Steel Taxonomy. As they say, you have heard from the horse's mouth around how these systems and schemes will be set up. Now, what I will do is I will move over to our other two panelists, to Nirmalaya and Vikas, and I will alternate between them. We had a couple of questions in the webinar, one of which we took it. There's another question around how this global stage will change. We will talk about it in the through this webinar. But if you have any more questions, can be anything related to CCTS and Green Steel, and Green Steel Taxonomy, please put it on the chat, and we'll try our best to answer it right now or take it up, after the webinar. Now, Nirmalai, again, thank you again for waiting patiently while we heard Mr. Didi. I hope you found that interesting as well. Good comments from him, sir. So, Nirmalai, what you have such a strong handle on the steel industry, on how a business is evolving. What is really the market readiness of Indian steel producers to uh, adopt these regulations as well as moving on to the green steel? I mean, the actual technology of doing it.
Yes. So thank you for the opportunity of being able to share my insights on this platform. The Green Steel Taxonomy, so I'll start with that. The Green Steel Taxonomy, of course, is a commendable step. And India, as we know, is the first country in the world to have come up with the taxonomy in the first place. How closely aligned is it with market realities? Now, basically, as we know that the integrated steel production process and the secondary steel production process, quote unquote, that we usually divide in India. So there, the government has also given emissions intensities, currently prevailing emissions intensities. For the BOF route, we know that the emissions intensities India is from around 2.2 to 2.6 per ton of carbon dioxide equivalent per ton of crude steel. And for the DRI IF route, it's higher. It's close to 3 or maybe even higher. So these are the two basic routes of steel making in India. Now this is crude steel, and the Green Taxonomy talks about finished steel. So there also the government has given a kind of breakdown. Steel finishing, of course, as we know that the carbon emissions majorly come from the iron making process and also from other upstream processes. Steel finishing, if we take, for example, the DRI IF route as an example, their steel finishing contributes about 2.3 to 2.5% of total emissions. In the integrated sector, it could be a little higher, but in the secondary sector, it's around 2.5. So per ton of finished steel, if we follow the star system that the government has given from 2.2 to 1.6 or lower, then none of the companies in India currently, or very few companies, only a handful of companies, are in a position to be able to deliver on that taxonomy. So basically, if the government is promising procurement of 37 to 40% for government projects, we also have to note that the secondary steel sector has not been able to participate in a very major way in government projects till now because of different kinds of quality concerns, especially regarding long steel products. So even now, if they get the opportunity to do that, there are very few producers who can produce, steel which is below 2.2, tons of carbon dioxide per ton of finished steel. So, but it is aligned. So it's aligned in the sense that the government has given a fixed target for the steel industry. The target is to lower emissions and to fulfill certain criteria in order to be able to take part in government procurement, in order to be eligible to produce green steel. So these are aligned to Indian conditions in the sense that if we take, for example, a methodology followed by Kloeckner Metals in the US, so there we see that minus scrap, without any use of scrap, they say it is green steel only when steel has an emissions intensity of 0.4. And with scrap, I think it is 0.1. So, so we are, of course, that is not applicable in the Indian case because of different, realities that we confront. For example, we don't have scrap. For example, we don't have easy access to natural gas. For example, the raw materials that we use are, of quite poor quality compared to raw materials available in other parts of the world. So, of course, these are the major challenges there. The one other point about the green taxonomy is that the government has very clearly avoided the sliding scale methodology, which basically, kind of disincentivizes scrap use for green steel production. So there, because it gives the producers who don't have scrap a much a much achievable target. I would say much more achievable target than people who actually have scrap. So yeah, it is aligned to Indian realities. But if you are asking about Indian conditions right now and how many producers are in a position to be eligible to satisfy the criteria, I don't think that there would be many producers in India currently who are eligible according to that criteria.
Very nice. Nirmala, thank you for that. I think that is very insightful, give a good overview and also the path ahead. Shifting gears a little bit to Vikas, right? Vikas, we've heard from Mr. Didi that the verification process is intense. Obviously, a lot of data is going to go in. How should steel companies think about structuring their data and harmonizing different reporting mechanisms? Because there are multiple reporting mechanisms. So just a couple of minutes, if you could just hear from you around how should steel companies think about data management for CO2 emissions?
Sure. Good morning, everyone. So data will be critical as we go along, and as this whole carbon reporting space and carbon credit space becomes more matured. There are multiple methodologies, it's super confusing. But at the base of it, the data required for all these different types of reporting is same. Yeah, it's your plant operations data. So that's the same. Yeah, you're operating the plant, you're generating massive amount of data. More important is how you structure the data so that your reporting is enabled. Whenever you think about structuring the data, there are three things which are very important. One, data consistency. Two, data completeness. Three, data timeliness. So let me speak more about each of them. So first of all, data consistency. Given that all these methodologies have kind of similar database, which is similar data requirement, for example, the plant operation data, yeah, or the lab sample data, or the supplier data, or the customer data, depending on methodologies. Important is you collect the data in a place. It can be automated or semi-automated, but in a place where you have a certain templates ready for plant operations separately, for lab sampling, and there is a list of lab sampling with guideline that has been provided both by CBAM as well as now CCTS. So following those, you need to put all the data in one place, and same for the supplier data. Supplier data is tricky because certain methodologies, especially CBAM, requires you to get the real supplier data, and most of our customers are struggling, and it's a journey. It will take time, but the whole data collection with the supplier should start now. You should be asking your suppliers, why don't you start collecting the data based on certain methodology and start supplying to us? Yeah. Again, it has to be a very structured way. You don't go after every supplier. You create kind of a Pareto where you say, you know what, majority of my emissions, typically 80, 90% of my emission will be with 20 suppliers. Yeah. And that too, you shortlist by who are the major contributors, especially like the commodities that you're purchasing. In steel case, it would be pig iron or sponge iron, or it could be billets for the downstream. Those are the major contributors. So you start targeting them, create a Pareto, go after supplier one by one. Every quarter you finalize, okay, I'm going to target X suppliers in a quarter here. Don't go after all of them. It becomes very tricky. So that's on the supplier side. Plant operation data, you are sitting on a massive amount of data. You may need certain IoT devices or a certain intermediate data aggregators, we call it EBAs. So you might need those data flowing into your ERP system or MES system or even level two, so the data can be pulled from there. Yeah, but important is you need to identify which is that master set of data that you need around operations, sampling, lab samples, supplier and customer data, and then start collecting them month on month. On the when I look at the completeness of data, the most important is the mass balance of the plant. Yeah, because more and more all the methodologies now are moving towards the mass balance. Yeah? GHG earlier never had it. Now they have introduced since June. CBAM requires even CCTS to a certain extent. So mass balance will be critical. So and all the plant on a day-to-day basis they typically align with the mass balance concept. It's more important that you start tracking them with a certain frequency, whether it's monthly, weekly, daily, whichever you're going after. But that mass balance gives you good transparency and also completeness, because then you don't miss any critical emission scope. The third thing is, and this also gives you a single source of truth. Yeah, because these methodologies are different. Once you establish your single source of truth, you can be consistent, you can be complete. Both will suffice. Yeah. And finally, timeliness is important because all these methodologies are now asking you to track data at least on a monthly basis, if not weekly or daily, but monthly is a bare minimum. And every month collecting data from scratch is difficult, and it's prone to error, it's time consuming process, and every time all the entire plant is after this whole process of collecting data month on month. So what I would suggest is find a automated way of tracking these monthly data. It could be certain as simple as your some certain Excel sheets linked, or more advanced, you can go all the way to your ERP system, or a level two system is pulling that data month on month on a consistent basis. Put these three in place, that should suffice given all the methodologies that we see out there.
Very good, Vikas. We have one question from the audience which is directed at me, and I know Rajesh ji has to leave, so I'll answer his question. His question is, with Trump coming in on the world stage now, and he doesn't support the CO2 emissions reduction seriously, even European Parliament deferring the CBAM by 2 years. How do you see the future of CBAM and such mechanisms in other countries like America? See, governments will come and go. The previous government in the US was very gung-ho about this. The current government is yet to be seen. The now CBAM has not been deferred by 2 years. Right now is a transition period, and 2026 onwards, the taxation period starts. So far there is no official news of CBAM being actually deferred. Now, uh, we are entering at the world stage. We are entering a phase of protectionism around the world, right? Every country is moving from being global to being more local. You're seeing that in the US, you're seeing that in Europe. Every country is going to be there. Now, carbon markets will also evolve in the same way. India is dead serious about CO2 emissions. The fact that we've launched CCTS, that in itself is a massive, massive step ahead, which mature economies also have not been able to take. EU has the EU ETS, yes, which has been there for a while, but apart from that, there is no other major economy which has developed something like this. So we have definitely, stepped up the game. Uh, the question around the story of carbon footprint, will it get diluted? Not in India. I cannot, I cannot imagine um, a near or medium term future where carbon emissions discussions and systems are not part of it. That is, of course, my personal view, and we'll see how things like this will evolve. But to answer your question, Rajesh ji, it's not a fad. Once the government has got into it with CCTS, there is money involved over there with carbon credits coming in. When money gets involved, then things get serious, and there is no looking back from here. So my candid opinion on the topic is that this mechanism is here to stay. It will continue staying over here. Uh, Maybe I'll defer some part of this question to Nirmalya ji as well. Maybe, sir, you can. I know that Mr. Liddy talked about this $8 to $10 per ton carbon credit price. Uh, do you also have a similar estimate on how this will be?
No, I can't give you an estimate, but one or two points I would like to make about the carbon price that Mr. Didi spoke about. So before I come to the carbon price aspect, Harsh, I will talk a little bit about the CCTS as it stands today. Of course, we know it is a developing thing, and methodologies are coming. So it is too early to talk about it in entirety, but it is important to take stock of the fact that it is coming directly from the PAT scheme and the PAT cycles. So the problem here is that in India, the PAT scheme was basically about energy efficiency, and CCTS is basically about reduction of carbon emissions. So I think there is a difference in that. Moreover, the PAT scheme, as we have seen, has led to about 5.5 million tons of oil equivalent reduction in emissions, in energy efficiency, in energy savings from the steel sector, which basically amounts to around 20 million tons of carbon dioxide. So from 2012 till 2020, because we have the data, because if you remember, Harsh, that from the third, fourth, fifth, now we are in the seventh patch cycle. So from the third patch cycle onwards, ESERTs have not been issued. I mean, they're still going to be issued. So ESERTs have not been issued from the third patch cycle onwards. So till the third patch cycle, and the data that has been provided by BEE and the data that has been provided by the Press Information Bureau and the Ministry of Steel is that if we are taking that oil equivalent figure, so the total reduction in carbon emissions from the steel sector, I mean, in the form of energy savings, from 2012 to 2020 stands at 20 million tons. But India's carbon dioxide emissions from the steel industry in 2023 stood at around 240 million tons. So we can see the challenge involved. That is number one. Number two, now coming to your question about the price, as we have seen that the EU today has a price of around $80, if I'm not mistaken, 75, $80
Yeah.
carbon dioxide. But if we go back a little and to say around 2007-8, after the financial crisis, so what happened was that the price of carbon dioxide in the EU had fallen to $6-7, if you remember. That was because of too many free allowances being given, and there was no demand for I mean, supply was great and demand was very meager, and carbon dioxide prices had crashed. After which, there were certain regulations by the European Commission, by the European Union, and the market got slowly developed, and so the carbon prices started rising. If we see the emissions trading scheme in other countries, for example, in South Korea, or for example, even in China, where there are concerns related to data integrity and data transparency, or if we see California, their prices are hovering at a level of $10 to $12 per ton of CO2. So which won't boost decarbonization efforts in the industry, basically. Because if the carbon price basically stands at a level of $5 to $6 or $8 to $10 per ton, I'm not talking about India because India is making a beginning, and of course this is important. And if we are going to see a price of say $8 to $10 in 2027, so that will be quite substantial. But I'm talking about markets where the ETS system has developed for a fairly long while. There also, and they are very advanced industrial markets, unlike India. So even there, if the carbon dioxide prices are so low, so there is then some kind of discrepancy in the system that has to be resolved. For example, even in the PAT scheme, if we see in the PAT scheme, there were too many e-certs being distributed, and the supply was so much that there was a basic demand supply mismatch there. And also, if we see the offset mechanism that has come, that Mr. Didi was talking about, the offset mechanism, the voluntary offset mechanism in the CCTS, that voluntary offset mechanism was also there, if you remember, in the EU ETS. And it was manipulated in such a way that people got offsets for many different reasons, which didn't actually help in boosting decarbonization efforts in the EU.
Right.
So there are many challenges involved here. But for a beginning, if the price, as Mr. Didi said, should be around $8 to $10, I think that's fine for India, which is just fledgling carbon market just coming into existence. So in the next 1 or 2 years, if it's $8 to $10, I believe it's fine. But regulatory supervision and regulatory oversight is needed in order to ensure that the flaws or the drawbacks that we saw in implementation of the PAT scheme are not replicated in the case of CCTS.
Very good, very good, very good. Thanks, Nirmalya, for that. There's a question from the crowd. I know we have just a couple of minutes. I'll go through them very quickly. Is the CCTS registration mandatory for all steel manufacturing companies? Mr. Vinayak, this question is from you. I'll answer it directly. No, it is not mandatory for all the companies. It is only mandatory for the 135 steel companies which have been identified across PAT cycles 1 through 7. If you want to know whether your company is one of them, this data is available publicly on the through BE. You can actually inquire about it, or we have that data set as well. You can just write to us at my email address, or contact_us at Centra World, where we can answer this question for you directly. There is a question from Mr. Pankaj Gupta, director at Vikas. He's saying that as a lot of variability in the inputs, how foolproof do you think mass balance route will be? For example, in oil and gas crude, we have crude assays where you can track using mature tools. For steel making, do we know of any standard mature tools out there? And maybe I'll just frame this a little broader. Because in maybe just in 2 or 3 minutes, could you give us an overview of what the Centra tool has to offer as far as the whole point about CO2 footprint is concerned?
Sure. Thanks, Pankaj, and an important question. Data, and this also links to a question. I mean, in most people do ask us most of the time is how do we go about verification and all, and the trust factor that we have been talking. So everything boils down to the same, right? How do I trust the data that is being provided? How accurately it is measured and how accurately it's being reported. The way we try to tackle also in our platform is, see, at the bottom of it, there are two types of data that you need. One is consumption or activity data, we call it, yeah, consumption, production, etc. Another is emission factors, yeah. So how much carbon content is there in your in per unit of consumption. These two at the bottom of all the calculation that you see is there. Yeah? So tackling the first one, which is consumption data, consumption per ton, production ton per ton, etc. This is where what we do is we typically go for the automated way where we link the data systems with the with SAPs or level 2, yeah, because that is taking the data directly from the IoT devices via PLCs coming to level 2 and then level 3, which is your SAP or any other ERP system, yeah. So there is no manual intervention as such, and the data flows throughout. So that solves one part of the equation. The second part, which you referred also, is the crude assay part. So see, the crude assay is equivalent to our lab sampling, yeah. So crude.
Vikas, we can't hear you.
No?
Yeah, now we can.
Oh, sorry. Okay. So the second, I think you heard about the first part, right? The second part, which is around the emission factor or the quality part, which is what crude assay also does, right? You have crude assay where you get all the properties, quality parameters of the crude. Similarly, we have our lab samples, and in this case, it's CCTS in particular has been very good and very transparent compared to other methodologies on what and how to use the lab samples. So they've said first priority is lab samples, second priority is emission factor, the default values. Yeah. And within the lab sample, it has to be ultimate analysis for determining the total carbon, which is very critical, this total carbon, because there has been a vagueness across companies whether we should use fixed carbon or total carbon. CBAM was not very clear. They wrote total carbon, but they never mentioned how to do it. Same for World Steel and GHG, etc. They alluded to total carbon, but never clearly said. CCTS had done a wonderful job. They said it's total carbon via ultimate analysis. It can't be clearer than this, and that solves. Plus, they have a full lab sampling plan that you have to submit actually. Before you do the reporting, you have to submit the plan as well, which outlines very clearly how to do the sampling, etc. If it is not available or if it is very cost prohibitive, then only you go for the default values emission factor. Again, my suggestion has been, given that we have served 50 plus customers in steel, try lab samples first, because these default values are designed in a way that the numbers are higher. They are taken from the worst, sometimes LCA, etc., but they are not that trustworthy. It's not meant for India at all. These are more global numbers. Go for the lab samples. It is more accurate. It is your own data, and more often than not, the emission factors that come out is actually lower than the default values provided. Yeah, and it is by design. The default values are designed to be higher so that it pushes people to get the real data. So that's how we are solving it. Of course, it's not easy to do ultimate analysis month on month or every 20 KT that CCTS outlines. But yeah, it's a journey. I mean, over time, people will start doing it, but at least we have to start somewhere. Yeah.
Fantastic. Vikas, thank you so much for that. So in summary, what Centra.world does is we have for CCTS, we have the complete package, which includes the calculation, documentation, and even verification by our onboarded ACVAs. This package now, in other forms of CCTS like CBAM or something, we have deployed at 50 plus companies. And as Mr. Didi was saying, technology plays a big role. Everything is enabled by our software platform, widely accepted by everybody, including verification agencies. And we are integrating AI also to align with BE's future plans. Now, time has flown by very, very quickly. We are already above time. I feel very, very excited and inspired after this session. We already thanked Mr. Didi for this. Nirmala, thank you so much for your time, and Vikas, you as well. And big thanks to Big Mint for hosting this and getting this together. Folks, in case you don't have, in case you have any more questions which you have not been able to ask, I'm just putting down our email address over here. Please feel free to reach out to us at any point in time if you have any questions. If you just want to talk about what's going on in the world of carbon markets, carbon credits, green steel, happy to have a chat and take it all. Thank you again for your time and wishing you a great week ahead. Thank you.
Thank you so much.
Thank you, everyone.